All right, hey y'all, welcome back. And the question today is, should you be refinancing your house right now? Now, big assumption there, you have a house and you've already got a mortgage on it. And my wife and I talked about it this weekend, and kind of reading the tea leaves, we've decided we're going to go ahead and refinance. And today I'm going to walk you through exactly why our decision process and why we think now is the right time. Now, of course, I have to say this is for entertainment purposes only. I'm not a financial professional. I'm not a mortgage professional. So please consult with your trusted advisors. But mortgage rates are at almost historically low levels. And it's been a little bit of a roller coaster over the past few years. The federal rate is still really low. But back at the beginning of the year, you can see on this chart, rates started to jump up. And we had talked about whether we wanted to refinance until it jumped up. But since then, things have continued to come down. Now, as we see it, there's going to be a lot of upward pressure on mortgage interest rates. Across the nation, housing is really, really strong right now. There's not enough houses for sale. There's way too many buyers out there. Prices are skyrocketing, and it's getting harder and harder for people to get houses. In addition, as the economy improves, that's going to continue to provide upward pressure on those mortgage rates, and inflation has been increasing as well. So I think there's going to be this continued pressure up to raise the rates. Now, to give you a little bit of context, my wife and I, we've lived in our house for right at about 11 years now. We refinanced 2 or 3 years ago to capture a lower rate. And it's been pretty frustrating. The whole time we've lived here, every time we refinance, the rates drop. And it's continued to happen. So we were looking at it this weekend, and we were talking about the market and what, honestly, geopolitical concerns are going on and where the economy is going to go. And we both agree rates are probably going to start increasing. So what we did is we broke it down and said, well, what are we paying now and how much could we save? And does it make sense to go ahead and refinance? So I'm going to show you those numbers. I'm going to walk you through exactly how much we would save and why we think now is the right time for us. If you don't have a house, now is a really good time. The prices are high, prices are going up, but the rates are really low. And waiting, I don't think will benefit you. We think that rates are probably going to start rising, but there's no real sign that there's going to be a downturn, that prices are going to start sinking and become more affordable, at least for the foreseeable future, unless something dramatic happens in the world to cause a worldwide recession that causes everything to start dropping. And let's face it, nobody wants that. So for us, we bank with a credit union, and we have stayed with our credit union for our mortgages. They've treated us very well, and they don't sell our mortgage, so we don't have to worry about who we're sending the check to or who currently holds it. They keep the mortgage. We could probably go through Quicken, Rocket Mortgage, some other mortgage brokers, and get a little bit lower rate, slightly lower rate. But you know what? Our credit union doesn't charge us any points. Their appraisals, when required, are quite a bit less expensive than paying a bank's rates for appraisals. So it's really fair to stay with them. Also, I want to note we have been using an adjustable rate mortgage. Normally, I'm terrified of those. But what our credit union does is they actually put a cap, a 5% cap, on what that rate can go up, and they limit how much it can go up every year. So if everything went to complete disaster for us, there's a cap on how much they can raise it. They can't go from a percentage up to 20% or 11% or something like that. They put a cap on it. So we're pretty comfortable staying with it, and we own less house than we could afford. Let's put it that way. So we're in a pretty good situation there. Evaluate it for yourself as to whether an adjustable rate mortgage, where that interest rate might start going up on you in the future, would constrict your ability to continue to make the payments, whether a 30-year fixed rate mortgage makes more sense to you. For us, the adjustable rate makes a lot of sense, and we're gonna stick with it. So right now we're paying 3.875 interest rate. And you can see right here, our credit union is offering on a 5-year adjustable, like I said, if you own 80% or less of your loan to value to the house, a 2.75% APR. So I'm going to switch over here and I'm going to show you on the screen exactly what it looks like in terms of the payments and how much we'll save by refinancing. All right, so I'm over here at my handy dandy favorite mortgage calculator over here at Bankrate. And I want to show you what we're paying right now approximately and how much we'll be able to save if we refinance at this lower rate. So let's go over here, and right now our house, we have about $200,000 on the mortgage. I don't remember exactly what we refinanced it at, so I'm going to use the $200,000 over here. This will actually make this payment show up as a little bit lower than it actually is. But we have a 3.875% APR. Now this calculator is super powerful. It actually includes homeowners insurance and property tax. But I really want to just look at the principal and interest, right? The property taxes aren't going to change when you refinance. My homeowner's insurance doesn't change. My HOA fees don't change. So I just want to look at what the principal and interest is. And this says that our payment would be about $940. All right, so we're going to grab ye old phone, open up a calculator, and we're going to put $940 in. It's actually more than that because I think we refinanced something like $240, $230, something like that. But you get the basic idea here. So let's go over here and change one thing, which would be to lower that interest rate to 2.75, drops it to $816. So we're saving $124 a month by refinancing. Now, what we would do is actually keep that $124 in our payment. We wouldn't actually change what we would send the bank. This will put us on track to pay it down a little bit faster. We have talked tentatively about this as a 5-year home for us, 5 more years, 5 to 6 years. Our kids are aging out. We don't really need all the space. We don't need the rooms. I hate stairs. So we're thinking about moving somewhere in the near future. So we don't want to screw that up. So I'm going to jump over here, and here's a mortgage calculator that allows you to put in extra principal payments. All right, so what I've done is I've already got it set up. It's 30-year mortgage, 30 years, $200,000, and a 2.75 interest rate. So you can see over this, you're going to pay $94,000 in interest over 30 years. If we put in an extra $124 a month, it's going to put our payment down to essentially 25 years, okay? Doesn't hurt us, doesn't help us as much as we would hope, but if we can actually increase that a little bit, all of a sudden we're getting down to 19, 20, 21 years to pay this off. It'll help a tiny little bit, but it also gives us that flexibility, that financial flexibility that if we need it, we can drop what we pay on the mortgage and have an extra $124 that we could apply to something else if we really needed it. So should you go ahead and refinance now? Well, I would recommend you go play with the numbers because like I say, it's just math. And I get the feeling that somewhere around 0.5% or more, it starts to make some financial sense. But it's also really important to look at the refinance you're getting. Do they have loan origination points? Are they going to charge you an appraisal? How much is all that? Because if you're paying $1,000 in points and $600 for an appraisal and a couple of other things along the way, all of a sudden, if you're saving $50 or $75, it could take you years just to pay off what you paid to refinance. For us being with the credit union, there's not going to be any points, there's not going to be any buy down, there's not going to be any application fees, and if we have to pay an appraiser, I think it's $400 with them or something like that. I think it might even be less than that. But because we have about 33% equity in the home, and actually it's more than that, they probably will not require us to have an appraisal at all. So basically, for no cost to us, we can go refinance, sign some paperwork, and lower our payments $124. It's an absolute no-brainer to us. That amount of money makes a difference. And honestly, my wife made the mistake of saying, hey, that'll let you buy the car you want. Oh, hey, whoa, hey, wait a minute here. But that's not what we're all about. We're about saving it, investing it, and paying down that mortgage a little earlier. So I encourage you, go play around with the numbers, see if it makes sense to you, talk to a mortgage broker, talk to a credit union, see what it's actually going to cost, and make the decision of whether it makes sense to you to go ahead and refinance right now. Take advantage of it before these rates, I believe, are going to start going up. So guys, I appreciate you being here. Let me know any questions, and please be sure to like this video if you haven't subscribed to the channel. Thanks, guys.